Good afternoon, this is Brian Shannon from Alpha Trends Blogspot. It's Friday, March 2nd, 2007, and the markets are closed for the week, so I've got a look here first at the Nasdaq 100, the Qs on the screen, looking at a weekly time frame. And obviously, I think that the intensity of this sell-off this week took a lot of people by surprise. It definitely took me by surprise. Fortunately, earlier in the week, some of the stocks that we had been involved in, we had gotten stopped out of. And then I didn't update any new stock positions, and I'm not going to either until we start to see some more stability in this market, because right now I think it's too late to really get aggressive on the short side given the magnitude of the sell-off this week. And I think it's also definitely way too early to consider any long side candidates. As you saw today, I tried a long side trade in the Nasdaq 100 thinking that maybe they were going to turn them higher before the weekend, but I was stopped out with a very small loss in there. And like I said, you can't stay with your conviction. You got to listen to the message of the market, basically, because just looking at a short-term time frame, the trend is still clearly lower here. We've got all these moving averages still declining, so it wasn't a good odds trade to begin with. However, I thought it was worth a shot with with a small stop. That's the job of a trader. So the market was not able to hold above this $43 level, which I was kind of thinking it would, but it didn't. So it closed at the lows for the day and the lowest close of the week. So we had a very negative week here. We can see that it opened near the highs and closed near the lows. Now looking at this weekly time frame, it looks like we're in an area where there's the potential for support. But just like I say, we can't say that a certain level will be resistance. We can't say a certain level will be support either. We're at a potential area of support. Definitely it's been important as a resistance back here in 2006 for most of the year. And now we're pulled back to that level. Resistance, once broken, tends to act as support, but it doesn't mean it will. So let's just continue to be very cautious in there and wait for some signs of stability before considering getting long. Now, the trend is definitely in jeopardy here. I like to say follow the direction of the 50-day moving average, and now we've got that 50-day moving average declining. So we're really at, I think, an important crossroads here in the market, and I still think that we'll probably see a rally up towards maybe this level next week, 43.5, 44 level, but I expect the volume will decline on that rally and that it won't be a good foundation for continued upside. So we're going to have to really start to pay a lot more attention here as far as risk management goes. And if this week didn't wake you up, then I don't know what it's going to take. But the 50-day moving average on the S&P 500 is now trending lower as well. So we can no longer say innocent till proven guilty. We're now in a market that's really got us given us reason, that is, to question the overall uptrend that we've enjoyed for such a good period of time, last 6-8 months, whatever it is. But this pattern of higher highs and higher lows was clearly broken right there. That's where we had a lower low right here for the first time, and that's when it says go to the sidelines. That's when cash is your best position, and that's why I haven't been updating any new stock ideas. When we start to get a little more stability, then I'll return to putting daily stock picks up there. But right, cash is a position, and realistically, sidelines are the best place to be until the market shows us some really better signs of what we ought to be doing in here. It's hard to do as a trader. You think, hey, I'm a trader, I should be trading. But realistically, there's times to be involved and there's times to be on the sidelines. I think right now is one of the best times to be on the sidelines that we've seen in quite a period of time, actually. So this 138 level looks like we tested those lows from late November of last year and finding maybe a little bit of support in there. On the weekly time frame, you can see that some severe damage has been done to this market this week, and just caution going forward is the best thing that I can say here. The MidCaps, who had been the big leaders in the market were looking for a pullback maybe towards this 150 level, because that had been this prior level of resistance and also the level of this 50-day moving average. The market came down to that area, but when you look at the weekly time frame, you can see that it takes on even a little bit more significance, because those were the highs from last year. And resistance, once broken, does tend to act as support. So that's why I think it's too late to get aggressive on the short side in here. Instead, I think if it can rally and retrace part of this sell-off, then we might want to look for a failure of the next rally, and that would be the time to get short. But right now, we're at a potential turning point, so the odds just don't favor much activity at all in here. The semiconductors, let's start with that weekly chart, because we were looking at this downtrend line being broken. I was starting to think, well, if we can get above 36 and hold above there, then the shorts might be in for a surprise. But it never got above that, above these highs, and complete failure in here. If we look at the daily time frame, though, again, what do we have? We've still got this same trading range that we've been involved in the semiconductors for quite a while. Now it's starting to head back down towards the low end of that range. So, about 3/4 of the way towards the low end of the range. So no advantage in the semiconductors either. So cash is a position, and I'm going to put together some ideas for Monday, but lost my train of thought. I'll put some ideas together for Monday at some point over the weekend. Meanwhile, enjoy your weekend. Thanks.